Apple CEO Tim Cook pulled 3 rabbits out of a hat. Now, pulling a rabbit out of a hat is a pretty good trick, but pulling 3 out of a hat, well, that's nothing short of a miracle. In the spring of this year, Apple stock fell below $170 a share as it was faced with enormous tariffs on iPhones, the potential loss of a $20 billion per year payment from Google, and sales for the iPhones, well, just seem to be stuck in the mud. To handle the tariff situation, Tim Cook promised U.S. investments of $600 billion over 4 years. That was not bringing iPhone production back to the U.S., but it was an investment of making AI servers in Texas and offering manufacturing training for U.S. businesses in Detroit. Apple also announced a $2.5 billion commitment to make iPhone cover glass in Kentucky with Corning, and also a $500 million partnership to produce rare earth magnets in the United States. After this investment pledge, the president said Apple would be exempt from tariffs on imported electronics. Now, to save the $20 billion yearly payment from Google, Mr. Cook sent Apple's senior vice president in charge of services, Eddie Q, to testify. Now, he convinced the judge that technology shifts are so powerful that they can take down even the most massive companies. In other words, the judge didn't need to impose harsh penalties, and the market would have essentially, well, just kind of take care of itself. And somehow, consumers have been convinced that the new thinner smartphone, called the iPhone Air, is a must for any consumer. The marketing of this must be phenomenal because the iPhone Air has a weaker camera, a single speaker, a smaller battery with a shorter life, and a higher price tag. Apple also convinced consumers that the rest of the iPhone 17 lineup was worth them doing an upgrade. Apple is predicting up to 12% revenue growth in the holiday quarter, twice what Wall Street estimated. So in roughly 6 months, the stock, after dropping to a low of around $169 a share, is up roughly $100 and somehow supports a price-earnings ratio of 36 times. Congratulations to Tim Cook and shareholders of Apple stock. If anyone said they knew Apple would be fine, either they have a crystal ball that really works, or they didn't understand the problems Apple is really facing. Going forward, however, the road is still bumpy, with operating expenses coming in at slightly over $18 billion for the December quarter. That's a 19% increase year over year and well above the 10 to 12% revenue increase that Apple is projecting. We don't see any big drops in the stock coming up, but I still cannot justify the share price to see any reason why the stock will continue to climb any higher going forward. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, well, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.